seems to be continuing in Bitcoin Cash, but is that all bad news? Are we going to have that lower low after all? Or is this just a temporary healthy pullback before we take off? Stay tuned to find out. This is our 30-minute chart, and I've been making posts in our community post section, so check those out if you haven't already. I can get charts posted there much more quickly than I can get a video turnaround. But we had a couple of buy opportunities come and go, and we've gotten ourselves what appears to be another buy opportunity. In Bitcoin Cash, we had pretty healthy looking setup, healthier than many of the other coins, in which you had 5 waves up, 1, 2, 3, 4, 5, followed by a 3-wave pullback right to the top of this box. That was our original buy box. And then we just rocketed right up from there. So we went from about $300 all the way up to $350, $340, something like that, relatively quickly, almost a little too quickly. So this causes some problems from an Elliott wave perspective, in that this was potentially too big to be a subwave 1, as noted in blue. And well, we're looking for a wave 2, a subwave 2 pullback. So this, again, this would be a 1, 2 and a smaller degree 1, 2. And well, it looks like, well, we've invalidated it. I'm actually going to put this nomenclature just to clarify what I'm talking about. These would be blue. So we're looking at this as a larger degree 1, 2, with this being a smaller degree 1, 2. But since we've gone through the bottom of the origin of the subwave 1, we've invalidated that, and therefore the orange pattern takes precedent. So this is better identified as the 5th wave top here, with the 4th wave being into this box, and our 3rd wave being the top here. So this makes a lot more sense. Where the 1 and the 2 are is debatable, but I'm looking at this entire thing as a 1st wave and this pullback as a 2nd wave. And this pullback can be interpreted multiple different ways. Is it clearly corrective? There's enough chop and whipsaw that I have reason to believe so. And when we look at our MACD, we're starting to see this thing curl back up. And well, we're seeing similar actions in equities as well. So far, we have actually retraced more than 61.8% of the original 1st wave in orange, now in orange. And that is expected, because we extend a little bit beyond where we would expect to go with our 5th wave. So far, I'm holding on to the belief that this is a healthy pullback. However, if we start pulling back a bit lower, we would have to break down below the 76.4% retrace, which is about 280, 279 for us to have any concern. The ultimate invalidation comes at 260. If we break that, chances are we are going to get that lower low, which we're going to look at in just a second. But if you did buy back here, you're probably in the negative at the moment, but I'm expecting this to be temporary. We saw a similar pullback in equities. And the reason I care about what happened in the stock market and equities is that we've been seeing almost identical action in the S&P 500 and cryptos, in which we had a big 5 up, and we've pulled back sufficiently for this to be a more deep 2nd wave. So good sign there that we are aligning in such a way. This is not always the case, but sometimes it is. And well, sentiment can shift on the big picture, even across different asset classes. We've looked at energy and oil, it's going in the total opposite direction, where we've been rallying while everything's been crashing, and bonds might be turning around too. So this is our longer term logarithmic picture. And I mentioned the last update that we had a double bottom in Bitcoin Cash, which has been unusual. I don't know if I saw that in any of the other altcoins. Some of them came close to showing us a double bottom. So that would just mean that either this is the bottom right here, and this is possibly a 1, 2, or maybe this is a 4th wave here, with this being a truncated 5th. Whichever one it is, it doesn't really make much difference. We basically have had 2 tries at this support or resistance, whichever one you call it, depending on your perspective, and we haven't been able to break it yet. So in pure technical analysis terms, we've had 2 tries and failed so far to break down below this 260 resistance level. If we do break that, we'll probably fall in this box. 219 would be a very strong target with multiple confluences there. I don't see that as a great possibility right now, because we have pulled back, but you're quite oversold, and you're seeing divergences forming in the MACD across the board. So that is the story. There's not really much of a difference between red and green, practically speaking. Red would have us go a little bit further down. Green is just that means just that our bottom is already in. So where are we projecting from here? If we do hold and start to bounce back up, we would get into this box. Most likely, this is absolutely an approximate place for us to land. And really, this isn't actually a 1, 2. It much more fittingly be considered an AB, because we are looking at a diagonal structure. So this is what we'd be looking for, which we're going to look at in just a second, but we'd expect a rally somewhere in this box. And I could probably put a better estimate as to where we can land in just a second. But overall, when we just muted myself for a second, when we go back into our long-term picture, as you guys probably know by now, if you've been watching, I do see Bitcoin Cash as having been forming a leading diagonal kind of structure. The same thing we're seeing in Ethereum Classic and a couple of the other cryptos that are escaping at the moment. I believe Litecoin was one of the other ones. So you have a 1, 2, 3, 4, lots of chop, very deep retraces. Everything's in threes. So you have an ABC up, ABC down, ABC up. I was calling it a WXY down, but really this is also an ABC down. So I'm going to correct that to reflect that we don't probably don't have a double zigzag in place. So once you relabel it like so, we have an ABC down for our fourth wave, and therefore our final fifth wave up should take the form of an ABC upwards pattern. And we have strong confluences as to where it's going to project. We could typically, diagonals will project somewhere between the 1.618 and the 1.764 extensions of the original 1.2. And that puts us somewhere between 3181 and 4215. So that is a long way up. And as I was alluding to earlier, markets don't go in a straight line, especially with a diagonal setup. More than likely, you're going to have a very strong initial rally and a very sharp retrace before we get to the top of this thing. So this would be a realistic place for us to land approximately in this green box, somewhere between 850 and maybe as high as 1761. Those are not scientific numbers. I believe I was just using the precedent that was established from our original first wave. So if I apply some fibs here, take the 1.2 off, or the AB off of that, with the 1.32 extension of that, delete that. So that's probably fair territory for us to land in, somewhere in that range, maybe as high as 1436. Well, that's a long way up. And once that happens, you're probably going to get a great buy opportunity again back down here in the bottom of the B wave. Now, because it's a diagonal, we could get a rough timing estimate. I would not really bet my life on this, but usually you have your channel lines that give you somewhat of a dependable projection for when this could happen. If I had to take a guess, if we look at the confluences, 3181, this is looking maybe as soon as the end of this year. That would be the 1.618 extension. If we look a little bit higher up, actually, I was looking at the wrong channel line. My bad. Let me reset here. This is showing us, well, late into 2023. The reason I would be a little doubtful or a little skeptical about that is that you often have a throwover, which is why I have this C wave extending so high up. We will often see an incredible rally at the end of a diagonal that will poke well above the channel trend line. So this could come sooner, but there's no rush here. We have a lot of upside. So if you haven't bought yet, you'll have more chance to buy, especially if we do end up having a lower low. You might get a better price than I did when I bought. I'm fully allocated at this point. And so far, I'm just watching what happens. And I'm ready to accept hodling if this thing does pull back. Just a part of investing risk assets. So I'm going to be putting plenty more content out. Don't forget to subscribe so you don't miss those. And give me a like if you have enjoyed my content. Until next time, thank you for watching and happy trading.